Hey everyone, thanks for sticking with us. X being a little glitchy this morning, so we're going to get started shortly.
All right. Sorry on the delay, everybody, but welcome to another Stacks monthly ecosystem update. We'll just take a moment to let everyone filter in. Some minor technical difficulties again this morning, but we'll get started in just a sec. All right, we'll get this kicked off in just a moment. We'll just get everyone up here. Thank you for your patience while we work through the X glitches, but we're have a pretty good update for you guys today. Some exciting things happening. Um, we have some our key leaders are going to come up here and give some updates and then talk a little bit about product growth, governance, all of it. We'll get to some builder updates, which is pretty exciting because I know Zest launched Bitcoin native lending this week, which is awesome to see. So we have a good one for you. All right, if we can get Muneeb up here, we can kick it off with him and we'll get this started. Hey Muneeb, how you doing today?
Hey everyone, how's it going?
Pretty good.
All right, are we waiting for more people or should we kick off?
Let's do it. No, let's kick it off.
Awesome. So I think some updates from my side. I've been on the road lately, talking to some potential institutional partners, educating them about the protocol bond structure, and I've been getting some like pretty interesting feedback from these people. I thought it'd be nice to share some of that with the community. So first of all, I think the structure does come across as a pretty novel, a pretty new. People tend to get it relatively quickly as well, especially people more on the institutional or TradFi side. I think they understand if a instrument has seniority, for example, right? They can understand, okay, that these bondholders get paid first from the yield. They get it. They get the implications of it because it looks like a less risky product to them because of the seniority. So that thing is actually sort of like going pretty well with this audience, and that was like great to see. And then similarly, they get the risk aspects of the product as well. Effectively, I think there are so many different types of risks you have whenever you're looking for a Bitcoin yield product. Obviously, the biggest one is custody risk. If you have to do anything, right, like you're no longer using your own custodian or your cold storage, like immediately you'll start seeing custody risk. So some of the folks that I'm talking to, sometimes they even have requirements that they cannot use title of the Bitcoin, meaning that the Bitcoin has to remain in their custody no matter what. One other thing that came up, which is something that frankly even I didn't think about it that much, are some of the tax implications, because similar to the not losing the title requirement, there are certain products where you actually end up getting unintended tax consequences, which is a pretty big blocker for some of these institutions. Especially in one of the conversations, it turned out that they were super excited about the protocol bonds product, and then immediately started talking about that since Bitcoin kind of like remains in our custody, can we actually take stablecoin loans against the same BTC? And the reason was not to like double dip or so on like that. That's also interesting. But the main reason was that they were getting a tax hit from using the lending product on Coinbase. And actually, apparently, were a little bit frustrated with this as well, that Coinbase wasn't very forthcoming about the underlying tax consequences, and they would just issue you a tax form after using the product, right? So basically, I think when you're doing the conversion from BTC to CBDC and underlying, I believe, Morpho is being used, there are tax consequences there that you get hit by, and which, interestingly, even the SBC BTC design is different. Like the SBTC tax treatment is also very good, but especially uh, for the protocol bonds, because the Bitcoin just stays in your custody, it's even a simpler structure for anyone to understand that there are tax consequences there. So that was a pretty interesting insight that the institutional players are showing interest in the product because of these second order effects as well. One more thing worth highlighting is in some of the discussions that I'm having, the discussions become pretty quickly about the second order effects on the Stacks DeFi ecosystem, which was very encouraging to see. Right, like people start asking questions about looping strategies. People start asking questions about, what would be sort of like the quote unquote trickle down effect on the DeFi ecosystem, and that and the fact that Stacks has one of the strongest like DeFi and Dev ecosystem right now amongst all the sort of like Bitcoin projects out there is a very strong sign, because when people are looking at the full picture, this is a checkbox that not a lot of people have, and I think it increases their confidence of the success of this launch. That not only there is a lot of demand for just the base Bitcoin yield, but there is an existing DeFi ecosystem where all of the interest that is quote unquote the spillover effect can actually be very, very effective, because that machinery is already there and then pretty sharp already, that can actually absorb all that interest, right? So that was one point that's coming up a lot, and which was frankly like very great to see. On that note, let me give a shout out to the Zest team. I see Tycho in here already, and for the launch that they've done, like in the depth of a bear market, and doing a successful launch and just executing it so well across so many dimensions was really awesome to see. Let me pause there.
Awesome. Love it. Thanks, Muneeb. Yeah, I think it's always great to hear, trends and insights that you're seeing from your perspective. And I think that sets us up really for a great update for the rest of the people on the call. Alex, I don't know if you want to chime in now. I think we might have some, exciting things to talk about.
Yeah, we do. Yeah, I'll echo Muneeb. Shout out the Zest team, crushed it on their TGE launch, especially because like the last TGE that we had in the Stacks ecosystem was obviously in a very different like market dynamic a few years ago and things, and so I think we've seen this. We saw actually other TGEs and other ecosystems this last week that were way less successful than the Zest teams. So just like amazing work by them, and it gives us such a good roadmap for more in the ecosystem there. So that's awesome. Also, in case you didn't see it, Hermetica dropped another 25 BTC worth of capacity on HBTC, and I think immediately basically filled it. So just seeing a lot of like very good bullish signs on things in the ecosystem. Obviously, at Labs, we continue to just hammer away at Bitcoin staking and all of the other things doing. So let's see. what do I want to start with? Number one, I think later today or tomorrow, we will be shipping the updated sBTC bridge. I know this is something we've had going on for a bit, but it basically brings a really nice new styling and UX to it, much more in line with like the USDCX bridge. So that should be like really fluid and look nice and work better on it. We will also later today, I can't tell you who it is, but it's a really solid partner. We will have the first partner announcement for Bitcoin staking of someone who is a name we know. I will just say, don't get your hopes up to it. It's not strategy. It's not freaking Michael Saylor, but it's basically pretty damn great. So that announcement's coming out later today. We're also finalizing the draft of the SIP for Bitcoin staking, and that should be coming out, I think, on Monday. We're just finalizing some things there, as well as I think actually playing with some really cool new resources, like some AI-driven stuff to just like make it easier for everyone to access. Because I know SIPs can be very deep and technical, and we want to make it as accessible to as many people as possible. And so I'm really excited to see that stuff coming out and get community feedback on everything. So honestly, it's just been like a crazy week of momentum on the lab side of things. I'm sure other people talking a lot more detail of stuff. But yeah, I'm feeling really excited about really everything that's going on right now.
Awesome. Thank you, Alex. Yeah, everyone stay tuned, obviously, to the handle here for some very exciting partner announcements. I think you guys are going to like it. All right, Rena, I'm going to hand it over to you. Give us the download on the endowment.
Thank you, Kate. A few updates on my end from the endowment. So, one, grants are opening next week. We're so excited to have a rebuilt portal in partnership with Zero Authority. So, this will be a lot better of a consumer experience for anybody applying for a grant. When you apply for a grant, the commitment from us is that you're going to get feedback and a status of your application within 48 hours. So, it will be a very quick turnaround on grants so that people are not left hanging or waiting. And we are actually evaluating them on a rolling basis. So the sooner you get your grant application in, the sooner we can get you sorted and funded, which is the most important thing the endowment does. With the addition of Q2 grants going out, D grants is coming back. I can't wait. This will be very similar, if not exact, to how D grants has run in the past. This is completely run by the community and community stewards. The endowment just really does the paperwork and processing of it. We have no say in who the community selects for the recipients or the awards or the amounts. This is all completely run by the community, which a program like this should be, because from my perspective, the most important thing a grants program can do is be comprehensive and inclusive to every style of builder across stacks. And so that's why I am excited to bring back the D grants and actually host as many of these cohorts as we possibly can. So very excited about that. On the other programs that we're running, one I think many of you are familiar with is the Stacks Foundry. And in that, we launched a program called Validate. Validate opened 2 weeks ago, and essentially it's a program to get feedback, ideas, and vet your idea and take your product to market and actually get real consumers using it and actually testing it, and therefore bringing the traction that you need so that you actually can apply for grant funding. This is our pilot for the Validate program, and we had 70 applicants, and we have 60 active brand new builders in the program, which is huge because now we have a new masterclass and execution-oriented hot seat session where builders are getting feedback how to build in Bitcoin, in particular how to build in stacks. And the goal is to give early stage builders, especially indie teams or solo founders, or people that have come across from hackathons, to the framing and the resources to grow their projects and be ready to be eligible for a grant or an accelerator or another growth opportunity in the ecosystem. This is really becoming our new top of funnel onboarding program for builders to connect with people and have just really genuine excitement on what they've always wanted to build within Stacks. And then I feel like Muneeb and Alex stole my thunder on some of the TGE thank yous for Tycho, but we As many of you guys know, we behind the scenes are the endowment's role really is to support liquidity across the ecosystem in preparation for the road to TGE for a lot of our projects, especially Zest. The endowment deployed its own capital to make sure that we are putting our money into the ecosystem where it belongs. So we actively have taken out loans on Zest. We're helping provide stablecoin liquidity. And it's really about supporting DeFi from all angles, from a growth perspective, a liquidity, and being kind of institutional ready and TGE ready just across the board. So next month, you'll be seeing even more capital deployed on different protocols, whether it be Hermetica, BitFlow, Granite, kind of all of them. Anybody who is looking for capital deployment from the endowment, please reach out to me so that I can kind of understand your protocol and what the parameters are so that we can deploy. Thank you so much.
Thank you, Rena. Yeah, we love to hear the momentum from the endowment side. But now we're going to get into governance. So we'll bring up Claire and Zero Authority. I think we have some updates on a community workshop, some new office hours. I'll hand it over to you guys.
Awesome. Thanks. Great to be here and share a couple foundation updates with you guys. I think mostly recently our team has been looking at ways that we can operate more closely with community leaders. So that's led to a few things that I'm excited to share today. First, on that front, we're going to open up a few grants for rotating steward roles. These are going to be governance focused grants funded by the foundation that are scoped around things like keeping the SIP process moving as smoothly as possible and making sure that we always have strong community leadership on the governance side. Longer term, this is going to help create a new standard for our SIP process that's upheld by the community directly. So we're super excited about that. The foundation's role in all of this is really to be like that critical oversight function where we are allocating resources for the community to do that important work and be supported to do it. And I'll post more details on this by the end of the week, so keep an eye out for that. I'm going to post it on the forum. And second on this, we have a survey that went live this morning that's meant to gather some feedback for a new builder tool. I won't say too much because I'll let Zero talk about it a little bit more, but that link is going up on the forum right after this call. And then related to that, we're going to post the updated governance roadmap next week on the foundation website so you know what's in queue and where to find the latest updates on all of it. And last but not least, as you guys know, there's a big SIP draft underway. So we're really focused on supporting that process and keeping the community as informed as possible. So there's going to be more on that coming next week from the foundation side specifically too. Okay, I'll pause there so I can save time for Zero to talk through a couple more things.
Good morning. Thank you, Claire. We're so excited to be a part of the ecosystem and continue to build out a different tooling for the entire ecosystem, all the builders, all the creators, and great developers. So like Claire said, we've been taking a phased approach, and so we wanted to start with a SIP tracker. We wanted to bring more visibility to governance, and that includes CAD groups, SIP tracker, and being able to see voting, how that's taking place and where it's taking place. So we aggregated the sources together. You can still go to forums, you can still go to GitHub, but we put the SIP tracker on Zero Authority where you can see what's happening as far as the voting. And when the CAB groups go live, you can see what CAB groups are participating, whether it's technical, governance, or the economic CAB. We have all of those groups there organized in a really efficient and visible manner. A couple of things like Claire said, please go to the survey and fill out if you're a builder, if you're a creator, if you're developers. We really want to hear from you. We want to see if we can build some tooling that can make the visibility better for you individually, but we also want people in the ecosystem to be able to find you easier as well. And then we're rolling out some more AI assisted capabilities, and you'll hear more about that. We won't ruin any surprises. And then the big one is for the continuing conversation. So every 2 weeks, we're going to have the Friday conversations where we bring the conversation for builders, for SIPs, for voting, for CAB groups, and for governance back. And so we're so excited to see what the ecosystem starts coming up with these new SIPs rolling out as well. Thank you, Claire.
Awesome. Thank you both. Yeah, I think the work you're doing around transparency and all of the governance is much appreciated. Um, but now we're going to get over to some technicals. Adriano, I'll have you come up and share some updates on your end. I know Bitcoin staking is all hands on deck, but tell us what's going
Thank
on.
you. Thank you for having me, and I hope you guys can hear me properly. A few things. Let's start small, and then we'll go bigger. A small, very nice improvement is that we just released the stack score 0.4, which brings some security improvements, but also a lot of big performance wins, including a way to cache the source of smart contracts, which makes basically the chain behave a lot better. And this is part of our ongoing effort to 100x the chain capacity. We are throwing a lot of manpower and a lot of AI power at it. We have identified a lot of bottlenecks. We are actively fixing it. And we are also actively benchmarking pretty much everything we do so that we make sure not only that we really 100x the chain, but also that we don't regress in terms of performance. Then the rest of the team, the majority of the team is all hands on deck for implementing Bitcoin staking. Things are going pretty well in there. We have an internal milestone to be able to have an internal testnet in a couple of weeks, roughly, and then we're going to open access to everybody that wants to play with it, send us feedback, and let us know how things are going. We are also doing rolling audits, so our security partners, 2 out of 3, the third one is going to start later on, are already actively looking at the code, giving us recommendations. We're fixing things as we do, so that we basically build this thing secure by default rather than having to build security on top of it when the product is done. And lastly, we have a few things which are getting readier and readier to ship. So our WASM compiler is almost feature complete, meaning that we aim to have WASM be a one-to-one replacement of the existing Clarity interpreter. That is a lot of work because it means replicating all the features, but that work is almost done. And so I'm really, really excited about it because it's going to enable a bunch of new things, plus, again, improve performance. And it seems we are seeing no more bugs, which means we are very close to ship. So I'm going to keep you posted on all that. For the nerds out there, we completely reworked the way we do CI. And so it went basically from taking 1 hour on stack score to taking a little bit less than 30 minutes, which is a huge win, I think. And we are running AI extensively to help us be effective. And in particular, for those of you familiar with the pattern of auto research, we are applying it extensively. To give you an example, on one side, to prevent security vulnerabilities, and on the other, to make sure that the AI helps us highlight bottlenecks, things that need improving, so that we can keep the chain alive, kicking, and iterating fast. That's all from my side. Back to you, Kate.
Amazing. Thank you so much, Adriano, as always. Next, we're going to bring up Andre. If there's any updates you want to share on Bitcoin staking, product, or growth, we would love to hear it.
Sure thing. Thank you, Kate, and good morning, everyone. It's great to be here. I'll just give a quick update here from the product side. So as we heard earlier from Muneeb and Alex, really strong growth coming from around the ecosystem. We've had Zest, Hermetica, and BitFlow all hitting new milestones, releasing new products. It's really exciting to see, especially around the Zest TGE. I'm really excited to see this, and hopefully it opens the door for more ecosystem TGE across these different applications that can bring in more capital and more attention and really start to ignite more of the Stacks DeFi ecosystem. Same thing, BitFlow's HodlMM continues to show good traction and solve a key pain point in the ecosystem, while Hermetica continues to bring in new Bitcoin capital to deploy in HBTC. So that's all super exciting. For some quick metrics that I can run through, sBTC supply holding steady at 4,100 BTC, spread across 11,000 unique holders. Most of these are institutional funds, family offices, and large Bitcoin holders. We have over 120 million in value deployed into dual stacking. And then the total DeFi TVL sits at just north of 116 million. So again, really strong metrics across the ecosystem right now. As Adriano mentioned, a lot of the focus is on Bitcoin staking and the new POX5 upgrade. At a high level, we believe that one of the biggest unsolved problems right now is that there's no credible way for institutions to earn Bitcoin yield without giving up their self-custody. You heard some of the problems that Muneeb spoke to in the beginning of this. And so we're betting that Stacks is the only network that can solve this problem at scale, and that specifically proof of transfer is the mechanism that can deliver it, because it has proven itself over the past 5 years, distributing over 4,000 Bitcoin to holders since inception. So really, we're doubling down on that through Bitcoin staking and this new protocol bond mechanism. As you guys know from the white paper, we'll have up to 6 concurrent bonds with new capacity being released each month. And a lot of the key value here is that it is completely self-custodial. So anyone participating in a native Bitcoin bond keeps unilateral exit over their Bitcoin. You control your keys. The Bitcoin never leaves your wallet. You can always ensure that you get your Bitcoin back at the end of the time lock. There's also a fixed estimated yield for bondholders, which is something that through our conversations with institutions, this was a very desirable feature. Instead of it being variable, it just allows us to have more consistency in the rollout of this product. And then lastly, of course, each bond must be paired with STX. So the role of STX really becomes this capacity asset that can really kick off this flywheel of growth. We're starting with 5%. So every Bitcoin protocol bond must be paired with 5% of STX. And why does this matter? Because this is really about kicking off the top of funnel to get more Bitcoin capital into Stacks and really activating the Stacks DeFi economy. Ultimately, this paves the way for us to roll out future products from liquid staking tokens, self-custodial lending, leverage looping, and even AI agents using Bitcoin capital on chain. The LST mechanism is something that I've been spending a lot of time on lately. I think this is where we can see a particular lot of growth coming into the ecosystem, because all of the Bitcoin that is being staked would ultimately allow you to mint a staked Bitcoin asset that would essentially allow you to use that Bitcoin as collateral throughout the ecosystem. One of the first primitives for this will essentially be a new vault structure that allows for leverage looping and additional yield opportunities in a risk-adjusted way. So really excited about this. Quick note on just like the rollout is that we are on track for the testnet in early June. We're expecting audits to be complete by early July, and then planning for the rollout of both the POX5 hard fork and the first bond issuance later that summer. And so that's all happening basically over the next few months in Q3, and then of course moving to a fully automated process in subsequent phases. A couple other things that I just wanted to call out here before we start to wrap up. So that's a lot of the I spoke about the core Bitcoin staking products, but there are some really valuable improvements coming in POX5 to the Stacks validator network. And so some of the biggest changes that we'll see here are sBTC really becoming the reward asset for the ecosystem. So this does a couple of things. It keeps the capital in the Stacks ecosystem and helps us to streamline the reward distribution. We'll have some quality of life improvements for all of our validators and make it easier for people to set a commission rate, to run nodes more effectively, to switch between signers and pools without having to go through a cooldown cycle, and removing some of the manual work that signers need to do each cycle. So all of this really comprises the POX5 and Bitcoin staking upgrade. The last thing from my end, if you haven't already, go read the white paper. Stay tuned for some of the SIP updates that are coming out over the next week, and keep an eye out for some announcements that you may see later today and this week. There should be some exciting stuff coming up. And yeah, that's it for me. Back to you, Kate.
Andre, thank you so much. Some very exciting things indeed. Okay, let's get into some builder updates. It seems like you guys just don't stop shipping lately, and you're making my job very easy to create content around all the things going on. So let's start off with Jakob. Tell us all the exciting things from HPTC and Hermetica's perspective. What's going on with you guys?
Yeah, thanks, Kate. We are very excited about what's happening in the Stacks ecosystem, and we just had a cap increase on HPTC. We opened up another 25 Bitcoin capacity, and it was filled in less than 24 hours. Really, folks are extremely excited about the product, and we are seeing the capital flow in. Anybody that hasn't gotten a allocation, make sure to subscribe to our waitlist, and there will be much more coming in the immediate future. To give a brief overview or refresher on how HPTC works. HPTC is essentially the Bitcoin carry trade tokenized, and any Bitcoin capital that flows into HPTC is deployed into the Stacks ecosystem, especially into Zest, and then we borrow against that automatically. We borrow stablecoin liquidity against that Bitcoin and deploy the stablecoin liquidity into high yield strategies to then generate a yield. The difference between the borrow rate on Zest and the high yield strategy is harvested back into Bitcoin. Today, the yield is coming from mainly strategies STRC, the digital credit from Michael Saylor, as well as Bitcoin basis. And on top of that, we obviously have the dual staking sBTC reward. It's really cool to see because HPTC is now one of the major users of DeFi. We make roughly 30% of the borrow volume on Zest already, and are really like bootstrapping the liquidity across all the different protocols. So that comes obviously with risk, right? If you deploy into a strategy like HPTC, you want to make sure that you really understand what you are engaging with. We are taking leverage against Bitcoin that is around 50% LTV, that is automatically managed through the system. So we rebalance the LTV on an ongoing basis. If it goes above or below 1%, that gets immediately rebalanced by a transaction on chain. There is full transparency of what's happening in the protocol. You can go to Hermetica FI and our app and see exactly what the protocol is doing in real time. You can track that on chain. You can see the transaction happening. And on top of that, we have a number of different systems that make sure that any profit that we make is harvested directly back into sBTC. So you're constantly accruing that sBTC vault. There are more caps coming. We're gearing up for another one. So make sure to either subscribe to the waitlist at hermetica.fi or shoot me a DM with your email. I'll make sure to put you at the top of the queue for the folks here in this call and in our community. And yeah, look out for another update. That's from my side. Back to you, Kate.
Thank you so much. Yeah, those are some impressive numbers. Congrats to you guys. Okay, you've heard a lot of people shout them out. Zest has had a huge month this month. So Tycho, I'm gonna call on you to tell us about it.
Yeah, absolutely. No, thanks. Thank you very much. I'm just quickly checking if you can hear me.
We can. Yep.
I'm okay. Fantastic, fantastic. Yeah, no, thanks very much for all the mentions and all the love and all your support. I mean, I guess you've all been here for many years in a lot of cases. It feels like kind of a this kind of high school reunion. But yeah, it's really been a great month for Zest Protocol. Of course, we launched the token, and that's really gone way beyond our expectations, I would say. Right, Zest Protocol opened around 8-9 days ago at 20 million FDV. So that was below the valuation that investors invested in, and
and then within a day it was already trading at 200 million after the Binance Alpha launch, and is now still sitting roughly there. And yeah, it's been really huge week. And yeah, we're looking forward, of course, to keep building and keep decentralizing the protocol, supporting dual staking on stacks. Right, for those of you who don't know, Zest Protocol is essentially the lending protocol, well, built for Bitcoin, and the largest lending protocol and the largest DeFi protocol in terms of TVL on stacks. It's where people earn yield on their BTC and borrow against their BTC and stacks assets. And soon we'll also be launching Bitcoin Collateral Vaults, which is our Bitcoin L1 based product where people can borrow directly against Bitcoin that they've locked on the layer one inside their own custody. So yeah, bringing going from being the largest in terms of TVL on Bitcoin L2 to bring that expertise to Bitcoin layer one and beyond. And yeah, that's kind of been, we unveiled that also in May, earlier in May at Draper Summit. Of course, Tim Draper being one of the larger investors and backers, of course, alongside Trust Machines from Muneeb and YZ Labs from more from the Binance side. And so yeah, we made that announcement in May, and then I think in June is going to be a very exciting month with additional venues where Zest will hopefully become available, and also the continued support of dual staking launch on stacks and pushing forward in that direction, because there's a lot that can happen here. I think when he already alluded to that in the beginning, where he said that dual staking is of course a really nice mechanism, right, to create buy pressure for STX and bring Bitcoiners to stacks to generate yield. But that yield, of course, only exists if there is transactions happening on the network. And the way that those transactions would obviously happen is if that yield is composable and essentially tokenized in some way and sliced and diced on the chain itself. And that's of course what the DeFi protocols on stacks will run towards, and Zest protocol as well, right, to support that. So essentially to bring those Bitcoin staking yields on stacks, make it possible to borrow against that staked Bitcoin, make it possible to loop up that yield, make it possible to split up the yield between STX and BTC pieces, and all those things. So yeah, I think a very exciting moment for the ecosystem, and yeah, also for us at Zest Protocol. But to kind of come back to the beginning, I mean, really appreciate everyone's support over the past month. We've asked a lot of you for various things to come on spaces, to write little things and so on. And yeah, really appreciate that, and appreciate all your support over the course of this month. And yeah, very excited to move forward and keep building all together.
Awesome. Thank you, Tycho. Yeah, I mean, I think the support is much deserved. So congrats to you guys again. Okay, Dylan, we're gonna send it over to you guys. What's good with BitFlow? How are things going on HodlMM, and any other updates you want to share with us?
Hey, yeah, good to be here. Thank you for having me. The HodlMM launch for concentrated liquidity has gone really well. We moved from beta to production, which basically just means that the main BitFlow app now has a new look, some new tokens, new AMM, and some better numbers. We're proud to support the Zest TGE this month as well. We worked with them to do a really cool, like, unique bonding curve shape, which is great for the community, sort of like what Tycho mentioned. Um, and we saw over a million in trading volume on our platform that first day, which on what started out as, I think, only like 20K in liquidity and then grew to 80K. So that was just an awesome volume to TVL ratio. And yeah, I mean, there is no second Zest. So we're glad they trusted us as the best Bitcoin DEX to partner with for the launch. And I think big things ahead for them too. So Overall, our protocol at BitFlow is at 2.7 billion in total transaction volume all time. And since the HodlMM launch, we've seen over 235 million in swap volume on just about like 2 million in TVL. So I share those numbers really just to highlight like the capital efficiency of what we've built. Uh, it's pretty awesome. And as far as the new look, we've got some new features and a light mode. For some of you that are maybe poolside summertime with a laptop open, you might appreciate that. Um, but a great UX is nice. Great UX is nice, but we are also becoming more and more agent friendly. We're doubling down on some agent augmented DeFi, with operators and agents working together to manage positions. And we're about to release a dashboard. I know Diego is very excited for this, where people can see their P&Ls and everything that you and your agent are doing on BitFlow. We also hosted a trading competition, which was a lot of fun. That was sponsored by AI BTC. Shout out to them. We saw over 45, we saw, yeah, 45 unique builders that made over 500 skills submissions. Um, and we did like 3,000 in prizes for that. There were 30 daily winners, and they just delivered a range of DeFi skills that were not just for BitFlow actually, but across all the protocols in the ecosystem. And if you'd like, you can go check out those skills on the bff.army website today. Um, we are also thinking about open sourcing the smart wallet keeper infrastructure for automations, or at least like a light version of it, so that people can add people and their agents can add contract enforced safeguards to the activity that their agents are running, and they can run it all locally if they'd like as well. And yeah, maybe last but not least, we're very excited for the Bitcoin staking updates to go live. Sort of in parallel, we're experimenting with a new RFQ system, and I think it'll be. I'll say the market makers with that are going to have a very clear advantage on stacks with their BTC capital, and I think this is going to be a huge aspect of what makes BitFlow the most likely venue to win BTC USD on-chain spot volume. And yeah, after that, we'll see some fireworks. So yeah, that's what we got.
Awesome. Thank you so much, Dylan. Okay, Jacob Brown, I'm going to send it to you. You've been doing some awesome work with the Bitcoin yield report. For anyone who hasn't checked it out, definitely go do that. It's really just ways to make your Bitcoin productive and just how Bitcoin capital is flowing on stacks. So you released the report. It got picked up by Bitcoin.com, which is a huge outlet. So tell us about the report and maybe, some good insights from it.
Yes, definitely go read it. Thanks, Kate, GM, everybody. Yeah, so our mandate at bitcoinyield.com is to research the best ways for people to put their BTC to work while also understanding the risks, which very much aligns with the goals that Stacks is pushing for right now. And so one thing we started to do is ecosystem specific reports and doing them quarter by quarter, starting with Stacks. And so released our first one. It did get picked up by Bitcoin.com, which is huge. They have a massive audience, so that's eyes that helps a lot. A couple interesting stats that I want to call out. First is around dual stacking. So we estimated that just over 9 BTC was paid out to people who are enrolled in dual stacking, which is huge. And another interesting piece here is that you have this unique design where you can choose either base yield and just sit in the sBTC asset, or you can deploy into protocols like you've seen here with Zest, BitFlow, Hermetica, Granite, and get a boosted yield. And the data here is that between 5 and 10 BTC on average was in the base yield, but over 1,100 has been in boosted yield. And so what that says to us is that overwhelmingly, if someone bridges into stacks and then enrolls into dual stacking, they're going to end up in a DeFi protocol. So they're much more likely to actively put their BTC to work, which is super interesting. Uh, Speaking on protocols, Zest was by far the most used yield earning protocol on during Q1. We tracked that around 650 BTC was in the supply during Q1. That did trend up to almost 700 by the end of Q1, so that's huge. And that was earning just over 4% APY on average. There's two other protocols worth mentioning, BitFlow and Hermetica. There's some data on Q1 in the reports, but they both launched really big product launches in March, which is the end of the quarter we were tracking. And so I'll leave this as a cliffhanger that for Q2, there's some really good data I'm tracking for the HodlMM and for HBTC. So looking forward to the next report. That's going to be a good one. Um, but yeah, just to close it out, like the biggest takeaway for me is that Stacks is definitely doing a good job of achieving its goal of making BTC productive. And self-custodial staking is a very, very small camp of quality products, especially paying in BTC. And so I'm very curious to see how this launch goes and be able to also track it in future reports.
Jacob, thank you so much. Okay, that wraps us up with all of the updates today. Before I let everyone go, I would just say if you haven't checked out the Bitcoin Staking Resources Hub on stacks.co, definitely go do that. We share lots of new content there around Bitcoin staking. But I think in general, there's just this really great feeling that Bitcoin native finance is coming to Stacks. We've had some amazing builder updates today. But I want to thank all the speakers for coming up here, sharing their updates and their insights. Go check out Jacob's Bitcoin Yield Report, put your Bitcoin to work. And we'll see you guys next month, same place, same time, given all the updates, and we'll see how far we come in a month. So thank you guys. Have a great day and stay tuned for some exciting announcements later today. Bye.